Hi guys, it's Chris here. I want to do a video on when you should be trading from the 38.2 Fibonacci retracements. Normally when we come on the course, we really emphasize the 50 and the 61.8 retracement areas, and they're obviously your high probability areas. But you'll also notice, the price does quite often turn around on the 38.2. So we definitely need to have a look and consider that as well. And just to give you a couple of pointers when trading on the 38.2, because it is a little bit more dangerous in that sometimes it can trick you and look like it's turning on the 38.2, but then go down to hit either the 50 or the 61.8 before it starts returning back up or back down. So just a couple of pointers and tips that I use just to be a little bit more certain on the 38.2. So obviously if we identify our A to B wave, so this would be A. Pick that up. And that would be B. Because it's longer than this one, we had a nice break above this level here. So once we've identified our A to B wave, we obviously want to put our Fibonacci from A up until B. Okay, so in real life, you'll see something like this. Now the market will come down and we'll come down to our 38.2 level. Okay, so when it's come down to the 38.2, you'll also notice that the stochastic has already got to the oversold section. Okay, so this is important. So when you see this, and it's on the 38.2, then you want to look back and to see, is there any really big supports, either on the same time frame, or can you see a support on the higher time frame? Okay, so if I just put a line on here and we go up to a higher time frame, then I'll see on that 38.2 line here, sorry about all this other junk here. Okay, so on this 38.2 is a very, very strong level of resistance, and it's a resistance on a higher time frame. So the fact that it broke up there means it's going to struggle to break back down on a time frame higher. If we look at the time frame we were looking at, which was the daily. Gone. Yeah, so price broke through that, but then it's got to break back down. It's going to have to break down through a weekly resistance, but it's not going to do that very easily. So if that ties in with a weekly Fibonacci 38.2, then, as I say, look on the higher time frame, see if there's a big support or resistance line there, which is going to stop it going through. Okay, so that's really the condition. One of the conditions that I would look for is a support and resistance on a higher time frame. So this was the daily, and I found that big level, which you can also see here on the daily, but it's illustrated as well on the weekly. So yeah, one condition is a support and resistance on the higher time frame at that 38.2. Then you can obviously look for your signals. So we've got your stochastic signal. Stochastic popped out through the 20. You got a nice little candlestick, so you could have entered a trade and traded it up. Let's see what would have happened. Okay, fantastic. So we've got a nice, went up to the Fibonacci extension 23.6. Okay, so that's one condition that I use. The other one is, okay, so say for example, we look at this, we've got obviously a nice uptrend happening, and then we've got an A, then we've got our B. Okay, so where do we draw our Fibonacci? We always draw it from A up to B. Okay, so again, we've got a retracement which has come down to the 38.2, or very close to the 38.2. Also going to watch what is happening on my stochastic, because I always want my stochastic to have touched either the oversold section if you're buying or the overbought section if you're selling. I can see the stochastic fast has popped into that oversold section below the 20 or on the 20. So I can look at the 20. I can be aware of this 38.2. I didn't quite get there, but you bear with me for the example. So the other thing that I can use as a little bit more confirmation is if I run a trend line, a previous trend line that's come up. Okay, so I can see on the trend line, it's bouncing on the 38.2. The fact that that's a trend line coming up also just gives me more confirmation. It's just an extra tick that I've got just so that I know I'm more certain I'm right to be trading on the 38.2. And that's really it. That's my conditions for looking at the 38.2. You know, I'll probably have the trend line in place anyway beforehand, but when it got down to the 38.2 or very close, and I saw that stochastic had ticked into the oversold section, then okay, I'm happy now to take a signal. I'm happy now to look at for my signals on the 38.2. So just to recap, previous example was about at that 38.2 level, just going up a time frame, looking for a previous level, which is on that 38.2. And then the example I've just done is about when it gets to the 38.2, stochastic as well, oversold, look to see, is it bouncing on a trend line? That just gives you that extra confirmation. So guys, I hope you found it helpful today. Any questions, as always, pop onto the chat room, give us a call, send us a message, and then yeah, we're here to help, guys.